Okay, everybody, it is me, Gregory Mannarino. It is Tuesday, May 17th, 2022. Well, here's a story right now. Seriously, we may not have gotten a rally yesterday, but today, stock futures are off to the races higher across the board. And wouldn't you guess we got more bad economic news, people? Retail sales missed the mark yet again. It seems like a never-ending story. And, it takes everybody by surprise on the mainstream channels. It's insane. They just don't understand it. They can't get it through their heads why the economic news continues to come in, not just bad, but abysmal, time after time after time. I guess they're drinking the bullshit Kool-Aid. They believe their own nonsense here. They're all reading a script. We all know that. There's nothing real about the mainstream propaganda ministry, all of them. And, they're buying their own shit. They're drinking their own shit that they're trying to feed you and I. Look, it's no secret to you and me, but this situation is abysmal. Our economy is in free fall globally. And there's no connection between the markets and the economy, period, the end. Zero. Anyway, with that said, yes, stock futures are higher across the board, but there's still fear. Let me explain this to you. Until fear leaves the market, we're going to end up in this pattern that we've been in for the past several months. There's a lot of fear. How do we know that? It should be evident to you, if you follow this blog, that by watching the debt market, the 10-year yield more specifically, you can gauge where cash is going to move through the market, and more importantly, maybe, at least in the shorter run, how much fear there is here. I know there's the fear gauge. I never look at it. Okay, people can stare at that thing upside down, backwards, and sideways. The biggest tell of fear is action in the debt market, and it's the 10-year yield more specifically. So right now, we have a 10-year yield which should be, based upon what the Federal Reserve is doing, raising the federal funds rate above 3. Until the 10-year yield gets above 3 yet again, that's a tell, a big tell, that there is fear in the market. Once the 10-year yield starts to rise, and I'm talking about a controlled fashion, not a rapid bang, 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 that's cash leaving the debt market that's going to make its way into the equity market. Okay, you understand? I've explained to you to the point of literally nauseum that the debt market is stable. It is stable right now. No uncontrolled sell-off is going on. So with that said, understanding the dynamics in play, it should be simple to comprehend what is going on here and why I remain bullish on this market here. And look, I still don't understand why people can't get it through their head that even when the entire market, major indices, Dow Jones Industrial Average, S&P 500, and NASDAQ, fall under pressure, that does not mean that every single stock is down. Some of the positions I have right on my website, traderschoice.net, Greg's stock picks, they've done very well. Look, all right, besides that, let's move forward here. So we got stock futures off to the races. Let's see how this day plays out. We got some fear here in the debt market. There's still this little bit of a safety play looking at the 10-year yield a little bit lower, about 2.89 last time I looked at it. You got the comparative strength of the dollar, or the relative strength, okay, which is lower this morning. Okay, market loves that. Crude oil, people, continues to surge. WTI out of control, going much, much higher. You all know that. Cryptocurrency is doing well this morning. We got Bitcoin back over 30, almost 31,000. We got gold and silver catching a bit as well. Let's talk about a few other things here before I let you guys and girls go. With regard to public enemy number one, the Federal Reserve, pointing at my hat, Okay. Understand that you're being lied to yet again. I have covered the fact that the Federal Reserve really has no intention at all on doing anything about inflation. As a matter of fact, they are continuing to foster it. Their current action with regard to raising the federal funds rate or the overnight rate in no way is going to change the trajectory of inflation. Now there's all this talk, as you are very well aware of, with regard to the Federal Reserve shrinking its balance sheet. In other words, selling the debt on its books. I want you to think about this yet again because I continue to get slammed with questions, okay? There's no way the Fed can do this, okay? People can go out onto the open market and if they want exposure to debt or if they want to buy debt, they can buy it in the open market yielding higher than what the Federal Reserve is holding on their books. So right there should explain to you it's just a lie. The Federal Reserve must hold the debt on its balance sheet until maturity. Nobody's going to buy it. With regard to mortgage-backed securities, okay, the Federal Reserve has been buying billions of dollars worth of mortgage-backed securities every single month. What has this been doing? Providing artificial demand for mortgages here, and it's inflated, obviously by design, a massive bubble in real estate. The Federal Reserve is not going to stop that either. So all the talk about the Fed shrinking its balance sheet, all the talk about the Fed slowing down asset purchases, it's just a lie. It's not going to happen. And the Fed is going to continue to foster and create by design more inflation. That's really, it's astonishing to me. You turn on the mainstream, any of them, of the mainstream channels, and they talk about the Federal Reserve as if they're doing a fantastic job. Our idiot, imbecile, retard president said the same thing. Oh, he's sure that the Federal Reserve is going to do a good job for the American people. Really? It's them. And see, he won't let you know that. It's a distraction and it's a deflection. Okay, no world leader, not President, idiot, moron Biden, not Trump, not Obama or anybody else would ever tell you the truth that they need their central bank to continue to inflate, to prop up the stock market, to foster a wealth transfer effect that's been in effect for years. And it's only going to get worse from here. You understand? Honestly, these freaks, and I always cover this, the last three especially, have done more to empower the Federal Reserve than any other three presidents in the history of the United States. That is the truth. Anyway, so I think you should take that away from this. It's not going to stop inflation. It's designed to continue to get worse. So you should expect energy prices to continue to soar, food prices to continue to go out of control. Your cost of living, you haven't seen anything yet with regard to your cost of living. It is going to go up so rapidly in the current environment that I hope you have your seatbelt on and you are prepared for what is coming. Despite the fact, I want you to think about this too, that inflation is surging out of control. Retail sales missed the mark. What is that telling us? What has been the talk lately? Oh, people are out. People are spending. Oh, they're spending more. Well, of course they're spending more because they have no choice. Everything is costing more. The fact that retail sales missed the mark, and this is what you're going to hear from the mainstream. Oh, retail sales are still going strong despite inflation. But what they're not going to tell you is it missed the mark. Okay, they can't allow you to know the truth. Anyway, like I was saying here, people are spending more because they have no choice. People are spending more because they're dumping dollars. They want out, all right, before the next wave of inflation hits. And none of this is a surprise to you because if you go back and look at my videos, I told you that wave after wave after wave of inflation was going to hit. And there's another one coming too. But again, what are they going to tell you? Oh, it's the war. Oh, it's supply chain disruptions. There's 1,000 other things, but they will not point their fingers at public enemy number one, which is the central banks. Where is the revolt? Where are the people in the street right now? Oh, they're too busy worrying about my body, my choice. Oh, wait a minute. It wasn't their body, their choice when they were being told to get vaccinated. But now it's their choice. Oh, I see. Look, it's always an agenda. And people have become so dumbed down and frankly retarded that we're going to see more of this moving forward here. They're going to allow themselves to be destroyed. They're going to allow themselves to be eliminated. Going back to this market real quick. So as I had said, in summary, stock futures are higher. Crude oil getting bid higher. Weaker dollar. All of these are good signs for the market. We have a fly in the ointment, that is fear. Fear remains in this market, just looking at that 10-year yield. The 10-year yield, people, must get above 3%. Once we see the 10-year yield move above 3% yet again, well, we're going to see this market turn around. All right, and I think the market is trying to do that now. The S&P 500 has been desperately trying to stay out of bear market territory by definition. I know a lot of you have your own definition, okay? You can't just define things out of whatever's going through your head, unfortunately, okay? You can't identify with a bear market. I know there are people here that are men that like to identify as a woman, or maybe they want to identify as a tree frog or a honeybee, or maybe I have no idea. But it's all crap, okay? You can't identify with a bear market in the S&P 500 when we don't have one yet. Not saying we're not going to get it, but the S&P 500 is trying to stay out of it, okay? So whether you want to identify with a bear market, we don't have it yet with regard to the S&P 500. All right. What a sick, twisted world we live in. Oh, I'm a man, but I want to identify as a cat. Lovely. Great. You don't think that's a sign of being screwed up in the head? Well, I do. And if you don't like it, unsubscribe. All right, look, I'm out of here. This guy here loves you a lot. Please share the video, comment. See you later.